Welcome to Countouts. In this lesson, we're going to be looking at the statement of comprehensive income or the income statement. We're going to go through an example of how to complete the income statement when we are given the pre-adjustment trial balance and additional information. So we'll go through it line by line and in great detail. So the question is in PDF, as you can see here, and I'm going to do my solution in Excel. So I've tried to enlarge it for you to be able to see it and to follow along. So let's begin. When you're doing the statement of comprehensive income, obviously we know that from the pre-adjustment trial balance or from the trial balance, we have two sections. We've got the balance sheet account section and the nominal account section. The nominal account section is where we find all our incomes and expenses, and that is what we need when we are completing the statement of comprehensive income. And the balance sheet section is where we find everything that we need, or most things that we will need for the statement of financial position. And we have done that lesson before, so if you'd like to check that one out, we'll leave the link in the description below. And here we have additional information, and we have to pay careful attention to each of the line items that we have here. So we're going to go through each one in great detail, and I'll be highlighting here in PDF for everyone that we have completed. Another thing to ensure that you pay careful attention to is the dates. Whatever date you are given is very important, because that is going to influence the numbers that you use and how you do your calculation. So we have to pay careful attention to that. So we are asked here to prepare the statement of comprehensive income for the year ended 31 December 2018. So that is the date at which we are preparing the statement of comprehensive income. And we know when we are doing any of the financial statements, we have to start by the heading statement of comprehensive income for the year ending 31 December 2018. Ensure that you put your date over there, because that's very important. And then once we have done that, let's begin with our statement of comprehensive income. Well, if you know the format of the statement of comprehensive income, we start with our sales. So let's first look at our sales over here. Now we'll be looking at the pre-adjustment trial balance in conjunction with the additional information that we are given, because additional information may change some of the numbers we have in our pre-adjustment trial balance and may have new numbers that we need to take into account. So let's look at our sales. Our sales, 990,000 rand, and we go to our additional information and see if there's anything that is spoken about sales over here. So here we have physical stock taking, we have notice from the municipality reflected the rates assessment, depreciation, debtor was declared insolvent, insurance, and amount owed for debtors, for directors fees, provision for bad debts, provide for interest, company tax. So here we are not told anything about sales. So if there is nothing in the additional information that is spoken about any of the line items here, then we'll just take that line item with its amount and put it in our statement of comprehensive income. And that is how it works when you're doing your financial statements. If nothing in the additional information is spoken about, for instance, now we just looked at sales. There's nothing about sales in the additional information, so we'll just say sales and that amount 990,000 rand. So let's begin. We begin with our sales, and I'm gonna put 990,000 here. Okay, and then I'll put my final figures in column D over here. But the reason I put that 990,000 in column C is because there's something else. Okay, first let me highlight the sales, because we have just done that one. Sorry. Okay, so it's important for you to tick whenever you've done a line item or whenever you've addressed something, so that you don't miss it in the end, and you also don't get confused as to which numbers you were initially working with. And then we have purchases, we have sales returns. Now here is something here: whenever we have sales returns, we have to deduct it from our sales, because we sold something to customers and they returned it back to us. So we put here sales returns, and we put it in brackets. What was the amount? It was 50,000 rand, so we put it in brackets, 50,000. Okay, and then we take our sales minus our sales returns to get our actual sales figure, because there's nothing here that affects sales. And if you have your pre-adjustment trial balance, maybe you're doing a similar question to this, it's very important to note this, that you see here we have carriage on purchases, but we'll look at this just now. So we have nothing else concerning sales down here, so we take our, now we calculate our final figure for sales. So we take this amount 990,000 and we minus the 50,000 rand because it's already negative. That's why I'm putting a plus sign over there. So let me put that in bold. Okay, so we have that sales already. Now we go to cost of sales. Cost of sales. Then what is our cost of sales here? Well, we know that if we are not given cost of sales directly, we may have to calculate the cost of sales. We are given the purchases here, we're given the carriage on purchases, and we have nothing else on purchases over here. But if you know how to calculate your cost of sales, remember we have opening inventory, and that's why I said the dates are very important. We are given inventory here as at the 1st of January 2018. And remember, we are preparing the statement of comprehensive income as at the 31st of December 2018. So this inventory here as at the 1st of January is our opening inventory. So this is what we had in stock at the beginning of the period. So we have opening inventory of 100,000 rand. So we are trying to get to our final figure. How much did we sell during this period? So we have, so let me do the calculation down here. Opening inventory, how much was that? We were given opening inventory of 100,000 rand, so I'm going to put 100,000 as a positive, and then let me highlight that one because I've just done it. And then what were our purchases? We have purchases of 400,000 rand, so we add that as well. Remember, you had opening inventory at the beginning and then you purchased more, so we had more inventory in stock. So we put purchases of how much? 400,000 rand, 400,000 as a positive. And then, so let me highlight that one. Then now that I've done purchases, here we are given carriage on purchases. Now, very important with this one here, you know that everything that we include as part of our inventory or as part of our purchases comes from the fact that whatever we need, whatever cost we incur in order to bring our inventory into a position where we are able to sell it, we will have to include it as part of our inventory cost. So let me repeat that again. Whatever cost we incur in order for us to bring our inventory to a point where we are able to sell it, we include it as part of our inventory cost. So you see here we have carriage on purchases. Well, if we didn't have carriage on purchases, we wouldn't be able to bring our inventory to a place where we could sell it. So that's why we include it as part of our inventory. So we highlight carriage on purchases, and I'm going to write that down in our Excel here. Carriage and purchases, you put it as a positive because it forms part of the cost of our inventory. Carriage on purchases, and we put the amount there, 28,000 rand. 28,000. And remember what I mentioned earlier on, anything that pertains to sales. Let's say it was written carriage on sales. What are we going to do it? What are we going to do with that? We're going to include it as part of our sales? No, we were not, because selling expenses are expensed. We're going to put it under operating expenses. So anything else that pertains to the sales, apart from the sales and the sales returns, we don't include it as part of sales. We put it under operating expenses. But anything else that pertains to inventory or the carriage on stock or the carriage on inventory or the carriage on purchases, we include it as part of our inventory because it's bringing it into a position where we are able to sell that inventory. I hope that has made sense. So we have carriage on purchases, and we have nothing else here pertaining to cost of sales or inventory. And remember, I've done this question before. I went through it just quickly to complete the question so that I can do this lesson. So you have to go through every line item. So just because I'm rushing it here does not mean that you just have to rush through it. You have to go through it in detail. And the reason I'm going a bit quick here is for the sake of the video. I don't want to make it very long. So the next thing that we look for is our closing inventory. Remember, we had our opening inventory and we had what we bought during the period, which is our purchases, and we had our carriage on purchases. We added all that together. Now I want to see what is my closing inventory, because when I have my closing inventory, I'll be able to know how much inventory I sold. So we go to our additional information. We're told that physical stock taking on 31 December 2018, which is the date at which we are preparing this statement of comprehensive income, revealed the following inventories on hand. So what does it mean on hand? These are inventories which are left in stock. So we still have them in our storehouse. So this is our closing inventory. Trading inventory, 80,000 rand. So we have trading inventory of 80,000 rand. And remember, we put this now as a negative because we want to see how much we sold. So we put 80,000 and we put it as a negative because we want to see what is the difference between our opening inventory, our purchases, our carriage and passages, and our closing inventory. Sorry, I was supposed to put this as closing inventory. Closing inventory, and it's 80,000 rand. So what is the difference between all of that? Well, that will be our cost of sales. So I will go equals sum, and obviously take that. So I'm adding all three minus the 80,000 rand, and I get an answer of 448,000 rand. That is our cost of sale. So remember, we have to put our cost of sale as a negative. Now that we have that, we're able to calculate our gross profit. Gross profit. And I put that, let me put that in bold, and then it's our sales minus our cost of sales. Remember, I'm using an Excel formula here, so if I put plus, it doesn't mean I'm adding it. It's because cost of sales is already a negative. So we have our gross profit of 492,000 rand. And then what is next? We do other income. Other income, and then we write down all the other income that we have here. Now, if you look through the question here, maintenance and expense, municipal rates expense, wages and salaries expense, stationery expense, bad debts, sundry expense, insurance, telephone, water and electricity, director's fees, auditor's fees. So these are all expenses. So we're going to expense them. So we have no income over there, and we will look at our additional information. Okay, let me highlight this one here. I forgot to highlight this one because we completed it. Is there anything that I didn't highlight? No. So we are still good. So we have no other income over here. Remember, like I said, I've gone through it in detail just before this lesson. So if you can see for yourself also, we have no income here that is detailed here. If we were given an income here, we would have included it over there. So you go through every line item to ensure that you don't miss anything. So since we have no income, we put 0 over here. There's no income over there. And then we go down. Now we detail our operating expenses. So I'm going to label that operating expenses. Remember, the format might be slightly different if you're doing it or if you've seen it in your book or elsewhere, but you will never be penalized for the format being slightly different. But this is exactly how it will look, more or less. So we want to label all our operating expenses here. Now we begin with our operating expenses. So let's look at maintenance. We're given maintenance of 17,000 rand. So let me begin by writing maintenance. And then question again over here is there anything under additional information that speaks about maintenance? Municipality, stationery, depreciation, debtor was declared insolvent, insurance, director's fees, provision for bad debts, provide for interest, company tax, and that's it. So there's nothing on maintenance. So remember, if there's nothing in additional information, I just take maintenance of 17,000 and I record it down over here. So I'm going to record all my expenses over here, add them together, and then put the total under operating expenses. So my maintenance was 17,000. So I put down 17,000. Then I highlight it over here. And then municipal rates. So let me write municipal rates over here. Municipal rates. Municipal rates. What is the amount? 15,000. So let's go and see if there's anything in additional information that speaks about municipal rates. We have, here we go, number 2. Notices from the municipality reflected the rates assessment for the year ended 30 June 2018 and 30 June 2019 to be 1,250 rand per month and 1,500 rand per month respectively. So what is it saying here? We are told that the notice for the municipal rates reflected the assessments for the year ending 30 June 2018. So if they are saying the year ending 30 June 2018, it must have started on the 1st of July 2017. So the municipality rates were from the 1st of July 2018 to 30 June 2018 and 30 June 2019 to be 1,250 per month and 1,500 rand per month respectively. It's very important to note what period we are dealing with here. We are told that we must do the statement of comprehensive income as at 31 December 2018. So we're only concerned with what happened between the 1st of January 2018 to the 31st of December 2018. So let's look at the amounts for municipal rates for those specific dates. We are told that until 30 June 2018, the rates were 1,250 Rand per month. So from the 1st of January 2018 to the 30th of June 2018, what were the rates? 1,250. So if you can count the months from January 2018 to June, the end of June 2018, that gives you a total of 6 months, because you're counting January, February, March, April, May, as well as June, because it tells you until 30th of June. If they told us until the 1st of June, we would not count June. But if it's until 30th of June, we also count June. So those are 6 months. And then from the 1st of July 2018 until the 30th of June 2019, and that is what this statement means. The rates became 1,500 Rand per month. So we are concerned between the rates from the 1st of January 2018 to the 31st of December 2018. So what do? We know that for the first 6 months is 1,250 Rand, and then for the next 6 months, 1,500. So let's calculate our municipal rates and see how much it should be. So I'm using an Excel formula here, so you can just punch it in your calculator. So it's 1,250 times 6. That's for the first 6 months, because it started from 1st of July last year, but we're only concerned about this first 6 months. And then we add that to the answer of 1,500, which is for the next 6 months, times 6 months, and we get an answer of 16,500 Rand. So that means our municipal rate is supposed to be 16,500 Rand. Now let's go back to our pre-adjustment trial balance. Our municipal rate here is 15,000 Rand. That means it's understated by 1,500 Rand. So if we are asked to do the statement of financial position, obviously we know there is accrued expense. There is expense that you still owe, so it's a liability. And if you'd like to check out the lessons on accruals, and it's very important when we are given the pre-adjustment trial balance and additional information to know what the accruals are. If you'd like to check those ones out and how you can account for them in the statement, in the various financial statements, you can click on the link on the top right of the screen. Otherwise, you'll find the links to those lessons in the description below. But anyway, we know that the municipal rates for this year is supposed to be 16,500, as we have calculated here, because we are concerned with this period that we are dealing with and want to know what the rates are for that. So this 15,000 Rand is understated, so we put the correct one over here because it's the actual amount for this period. And then we move on to the next one, wages and salaries, 80,000 Rand. So let's write the wages and salaries. Let me highlight that, 80,000 Rand. And I'm sure you can see from additional information, we did not see anything concerning wages and salaries. So if there's nothing in additional information and there's nothing over here in additional information concerning wages and salaries, we're just going to put the amount which we are given, 80,000 Rand. So we write down 80,000, and then we'll move on to the next one, stationery. We are told that our stationery is 11,000 Rand, and we know that a stationery is expense. And then let's go to additional information. Here, point number 1, we are told physical stock taking on the 31st of December revealed the following inventories on hand, and we are given stationaries of 2,000 Rand. Now, here's how you deal with stationery. When you're given stationery in your pre-adjustment trial balance, whenever you buy stationery, you record it as an expense because it's an expense item. However, if you're left with stationery at the end of the period, if they tell you that you have stationery on hand, it becomes an asset. It is an asset because you still have it in stock and you can use it in the next period. So you have to take it out of the expense. So in the expense over here, you have stationery of 11,000 Rand. So you have to deduct 2,000 Rand because the 2,000 Rand is no longer an expense. It's still left in our offices or in our store, in our storehouse. So it will be for the next period. It will be an asset for the next period. So if you are doing the statement of financial position, we'd record stationery under current assets of 2,000 Rand. But we have to take out the stationery from this 11,000 Rand. So we write stationery over here, stationery, and we take 11,000 minus the one which is remaining at the end of the period, stationery on hand of 2,000 Rand. By the way, if anything is written stationery on hand or consumable stores, for instance. Consumable stores, when you buy it, it's an expense. But when they tell you that you have consumable stores remaining at the end of the period, it's also an asset. So you have to deduct the amount which is remaining and then put the remaining, the answer after you deducted it over here. So like just like we've done for stationery, consumable stores, you do the exact same thing. So I'm going to highlight this 11,000 because it relates to stationery. And then we'll move on to the next one, bad debts. So let me first write bad debts. We have bad debts of 12,000 Rand. Let's go back to our additional information. So in fact, let me highlight the stationery and the notice from the municipality. Forgot to highlight them again. And then we go to number 4 here. We are told a debtor was declared insolvent and her account must be written off 1,000 Rand. So here we have a debtor who is declared insolvent and her account still needs to be written off. So we have bad debt of 12,000 Rand, and then we add the one that we are told is insolvent. We add this 1,000 Rand. So it's 12,000 plus 1,000 Rand. So we take 12,000 plus 1,000, and then you usually don't stop there. You also look for notes on the provision for bad debts, or on the allowance for doubtful debts, or allowance for credit losses. Those are the same things. It's just the new name that they are using, allowance for credit losses. So we are told that the provision for bad debts must be increased by 1,000 Rand. Now we have done quite a number of videos on bad debts and provision for bad debts, or allowance for credit losses. So if you'd like to check those ones out for a thorough explanation, you can find the links in the description below, or the link in the top right of the screen. You can click on that one. But whenever our provision for bad debt increases, we take the bad debts that were given in our pre-adjustment trial balance of 12,000, and then we add the 1,000, the new bad debt that we are told here at number 4, and we have just done that in Excel just now. So let me highlight this. And then if our provision for bad debts has increased, we add that increase of 100 Rand. So we are told that the provision for bad debts must be increased by 1,000 Rand. So again, it's the 12,000 Rand over here. So let me highlight this 12,000 plus the one which you are told that debtor was insolvent, 1,000 Rand. So 12,000 plus 1,000 plus the provision for bad debts, which is increased by 100 Rand. So we take 12,000 plus 1,000 plus the 100 Rand, which is the increase in the provision for bad debts. 13,100 Rand. That is our new bad debt. So let's go back up over here. Sundry expenses of, we're told it's 31,000 Rand. And from our additional information, we have nothing on sundry expenses. So we do not record anything. So we have nothing in additional information. So we record it exactly as it is here in the pre-adjustment trial balance. So we write down here sundry expenses, and we take the amount 31,000 Rand. Then we highlight that one over there. Then we move to the next one, insurance, 11,000 Rand. So let's go and look if there's anything on insurance. Yes, number 5 here, we are told that the insurance total includes an insurance premium of 3,000 Rand that was paid for the period 1st of May 2018, that is our period, to 30th of April 2019. So that has gone on to the next period. Remember, we're only concerned with what is happening during our period. So the insurance total, which is this total here, the 11,000 Rand, we're told it includes an insurance premium of 3,000 Rand that was paid for the period 1st of May 2018 to 30th of April 2019. Now we can see from the 1st of May 2018 to 30th of April 2019, those are 12 months. So we have an insurance premium which was paid for those 12 months. Now we want to take out the insurance which belongs to the next period, or which belongs outside the period we're dealing with. We are dealing with 1st of January 2018 to 31st of December 2018, because we're told to do the statement of comprehensive income as at 30th of December or 31st of December 2018. So how many months are outside our year or our period? Well, we've got 1st of January 2019, February 2019, March 2019, and April 2019. Remember, we're counting April because it goes until the end of April. If it was until the 1st of April, we wouldn't count April. So we have 4 months, the whole of 2019, which are 4 months, from the 1st of January 2019 to 30th of April 2019. So we have paid for 4 months for the next period. And what do we call that? We call that prepaid expense. And like I said, you can check the lessons on those in the links in the description below. Prepaid expense goes to our statement of financial position. We're not asked to do that, so we have to calculate how much does not belong to this period. So we calculate the one for those 4 months. So we take our, so first let's write insurance. Remember, we are given an insurance figure here of 11,000 rand, and we're told inside that 11,000 rand it includes an insurance premium of 3,000 rand that was paid for the period 1 May 2018 to 30th of April 2019. So first let's calculate what we do not need during this period. We will take, so let me do that just outside over here. So I will take 3,000. You can punch this in your calculator, times, or you can divide it by 12 to see what the monthly premium should be, 250. And we know for 4 months we paid for 4 extra months, so let's calculate how many are those. So we take 250 times the 4 months, we have 1,000 rand. So we know this insurance premium of 1,000 rand does not belong to this period. It belongs to the next period. We paid an extra 1,000 rand which does not belong to this period, and we know our statement of comprehensive income deals with amounts that belong to this period alone. So we know that inside this 11,000 rand, 1,000 is for the next period, so it's not an expense yet. It's prepaid expense, but prepaid expense is a current asset, so we're not concerned about it here. So we take our 11,000 rand, 11,000 rand minus the 1,000 rand which you have just calculated over here, and it gives us an insurance of 10,000 rand which belongs to this period, which belongs to this current period. I hope that has made sense. I hope the calculation has made sense over here. If you want a different way of calculating it, you'd have said 3,000 times 4 months divide by 12 months to see the one which does not belong to this period, and you'll get an answer of 1,000 rand, and then you deduct the 1,000 rand from the one in your, from the amount, the full amount given in your pre-adjustment trial balance. It's very important to pay attention to detail, because it could have told us that that insurance of 3,000 rand was not included, or is an insurance premium which was not included in our insurance amount. So that means it would be a different figure which you need to add all together. But here we are told the total includes an insurance premium. So it's very important to pay attention to those. So I'm going to highlight this one. And then let's move on to the next one, telephone. We are told that the telephone was 23,000 rand. And if we look at our additional information, there is nothing on telephone over here. So we're just going to take telephone and put the amount of 23,000 rand. So let me write down telephone 23,000. Because there's nothing in the additional information, we take it as it is from our pre-adjustment trial balance. And then next one is water and electricity, and from additional information we can see here there's nothing on water and electricity as well, so we're just going to take it as it is in our pre-adjustment trial balance. So you can see how easy it is when it's not addressed in our additional information, we just take it as it is. Okay, let me, water and electricity, how much was that? It was 18,000 rand, so we'll put 18,000. Then we move on to the next one, directors fees, 50,000 rand. So if we can see over here, we are told that an amount of 10,000 rand was owed for directors fees and was due to be paid on the 2nd of January 2019. So this was due to be paid in the following period on the 1st of January 2019, but this is the beginning of the next period. So an amount of 10,000 rand was still owed for directors fees and was due to be paid on the 2nd of January 2019. So we still owed an extra 10,000 rand for directors fees. So here in our pre-adjustment trial balance, we have directors fees of 50,000 rand. So we have to add that 10,000 rand that we still owe. So what do? We write here directors fees. Directors fees. In our pre-adjustment trial balance, we are given 50,000 rand. And over here, we are told that 10,000 rand was still owed for director's fees, which was due to be paid at the beginning of the next period. Remember, the beginning of the next period means it was owed for this current period. If it was said that it belongs to January or it belonged to the next period, then we wouldn't have included it. But it's at the beginning of the next period, so it belongs to this period. So we take the 50,000 rand in the pre-adjustment trial balance plus the 10,000 given in additional information. And that is our director's fees. So we highlight the director's fees, and then we move on to the next one. So let's highlight this one. Then we are given auditor's fees over here, and we can see from additional information there is nothing on auditor's fees, so we're just going to write auditor's fees and record that amount. What was the amount? 16,000 rand. So we write down 16,000. Then I'm going to take out the bold from that one, and then I highlight auditor's fees. Okay, now you can see I've gone through all my income and expenses in the nominal account section, with that we need to record in our statement of comprehensive income. And from our additional information, auditor's fees, or there was nothing on auditor's fees over here. So from our additional information, you can see that we still have some items we still need to take into account. The first one over here is depreciation. We know that depreciation is an expense, so we need to record it as part of our operating expenses. So I write down depreciation, and we can see here from our nominal account section, depreciation would have appeared here, but there's nothing here, so we have to calculate it here. So we are told that the depreciation must be provided for as follows: on equipment 10% per annum on cost. So if you do not know the two depreciation method, it's on cost and diminishing balance method. I'm not going to go in detail in this one, but we have done lessons specifically on those ones. You can click on the link on the top right of the screen, or you'll find the links in the description below. So I'm quickly going to do the calculation. Equipment 10% on cost, so you know, so since we know it's on cost, we know what we do. We take the cost price of our equipment here in our balance sheet section of the pre-adjustment trial balance, 90,000, times the percentage. How much was the percentage? 10%. So let me do the calculation. Let me do it over here. Depreciation equals to 90,000, which was the cost price of the equipment given, times the 10% per annum. So that is the depreciation for equipment. Then what next do I need to do? So I've done for equipment 10%, on vehicles at 20% per annum on the diminishing balance method. So let's calculate for vehicle. So this one is on diminishing balance method. So you can check out those lessons if you do not know how to do so. But to diminishing balance, we take the cost of the vehicle, 230,000 equals to 230,000. Okay, I should have opened brackets first, and then minus the accumulated depreciation on vehicle at the beginning, which is the 50,000. So minus 50,000 rand, and then we get our carrying value, and then we multiply that by the percentage, and we are told that the percentage on vehicles is 20% per annum on the diminishing balance method. So times 20% and gives us 36,000. Then we add depreciation for all our assets. So we add the 9,000 for equipment plus the for vehicles. If we had other assets with depreciation, we'd have to add all the depreciation for this period and put them in our operating expenses of the statement of comprehensive income. And we've just done depreciation. Okay, and then we move on. What else are we missing? So we are only missing interest over here and company tax. So since our interest is not part of our operating expenses, we do it separately at the bottom. So let's add up all our operating expenses. So operating expenses equals to the sum of everything over here. Okay, and then I make sure I put it as a negative because our operating expenses are expenses. And then move on over here, we call it operating profit. Operating profit, or profit before interest and tax. So you can call it either of those. And then we know our operating profit is our gross profit plus other income. We have no other income, so plus other income minus operating expenses. Remember, I put it as a positive because operating expenses is a negative, and this is an Excel formula, so you'll punch it in your calculator. And then now that you have operating profit, we have to now take into account interest. We are told that provide for interest on debentures that is yet to be paid. Now, if you can see here, we have debentures. Yours might not be debentures, it might be long-term loan. And you can see we are given the percentage, and we are given the amount of the debenture, or the amount of the long-term loan that we owe 260,000 rand. So for you to know how much is for this period and how much you need to pay and how much you need to include in your statement of comprehensive income, so let me just write that interest expense. You take your percentage that you're given in brackets here times this amount, 260,000 rand, because that's how much you pay per annum. So it's 12% times the 260,000 rand, 260,000, 31,200. So let me put that as a negative 31,200. And then we have our profit before tax. And then our profit before tax is your operating profit minus your operating expense. That's your profit before tax. And then we calculate our taxation. Let me just highlight that one. Calculate our taxation. Okay, let me highlight provide for interest. We calculated the interest. So our taxation here, we are not given a tax percentage. If you are given your tax percentage, obviously it's so easy. You will take your, so let me write here, tax. Obviously, if you are given a percentage, let's say for instance, like here in South Africa, it's 28%. You will take our profit before tax times 28% to get your tax expense, put it as a negative. But here I was just told that the company tax for the year is estimated to be 36,000 rand. So the company tax for the year is estimated to be 36,000 rand. So I was given the company tax. So I'm just going to put 36,000 rand over there. And then now I put here profit after tax or net profit. So you can name it one of those two and it will be fine. Then that's profit before tax minus tax expense gives us our profit after tax. So once we have our profit after tax, we are done with our statement of comprehensive income. So let me just total, let me put in the lines. Okay, there we go. So we are done with our last line item. So you can see how simple it is to calculate the statement to do the statement of comprehensive income when you're given the pre-adjustment trial balance and additional information. Very important tips. When you're asked to do the statement of comprehensive income or the statement of profit and loss and other comprehensive income or the income statement, they will use those names. Remember, you look at the nominal account section because that's where your incomes and expenses are. And then you may need to go up to your statement, the balance sheet account section, because you'll need to calculate your depreciation using your vehicle cost and equipment cost and the accumulated depreciation depending on the method you're asked to use, and also your long-term loan interest or your debentures interest. Remember, you will find them on the balance sheet section. And if there is nothing that is mentioned here on additional information with regard to whatever is in the pre-adjustment trial balance, you just take the amount in the pre-adjustment trial balance with the account and you just put it in your statement of comprehensive income. But if additional information addresses it, pay careful attention to that, pay careful attention to your dates, and then you'll be able to do your statement of comprehensive income correctly. I hope that has made sense and you've learned something over here. If you have any questions or queries, leave them in the comment section below. Otherwise, if you have gained value from this lesson, if you have learned something new, please subscribe to our channel, like this video, and share it if you can. Till next time, cheers.